Hello, everyone. It's time for another federal tax update podcast. And this is Roger Harris, and joined as always by Annie Schwab. Annie, how's things in Texas today?
Doing pretty good in Texas. I see you're back in your office after all your tax forums and Washington visits. I'm shocked to see you at your desk.
Yeah, well, look quickly because I'm off again next week to San Diego to wrap up the IRS forums, which have
Mhm.
they're good. And, we'll talk a little bit about kind of lessons learned. I know you were at the one in New Orleans.
Correct.
So I think you didn't go to Orlando. There were 4,300 attendees in
Wow,
Orlando,
that's a great turnout.
and I just came back from Baltimore, and I think there's about 2,300 there. So everybody likes to go to Disney World, I
I
guess.
guess
So
so, right? Last minute family vacations.
that's right, squeeze it in. Well, we're recording this. We're heading quickly towards a September deadline, and then we'll have an October one, and then it'll be time to start planning for the next one. Starts next year.
There really is a full year. It's a busy season all year round. I don't really think that there's a set busy season at this point anymore.
Yeah, April 15th still has its kind of traditional feel
Correct.
to it, like, wow, the biggest part is over, but maybe that's not true anymore. I mean, there's more and more people that file after April 15th, and it runs all the way to October, unless you're in a disaster area, and it
And
may
then it
even go
goes
beyond
exactly.
goes on beyond that. So kind of the endless tax season. And while you guys have been heads down working on this, there has been some new things. So Annie and I are going to try to share with you some some changes that are not some changes so much as some new information that's
Correct.
coming out on um, OB3 or the One Big Beautiful Bill or whatever it's called. Um,
Right.
Nowhere near everything is out, but there has been some new information, and hopefully we'll get more as time goes by. But let's start, Annie, talking about the first thing I guess that we got. Well, I guess the first thing we're going to talk about, I don't know if it was first in what we got, but if you remember the whole new no tax on tips, we were going to get a list of the businesses that would broadly qualify. As we'll say in all of this, we're still waiting on a lot of guidance, but we did get the list of the businesses where tipping would qualify, and Annie, I think there were a lot that we expected and a few that we didn't.
Yeah, I agree. We had been waiting on it, and this is just a preliminary list. So we do expect, some clarification. But they did, obviously the beverage and food service industry, bartenders and your waiters, the fast food workers, dishwasher, all of those bakers, the wait staff, hostess. Those were all common. I didn't in that category, so to say. I didn't find too many
No,
shocking things. They tried to separate it into like food and beverage. There's like an entertainment section, there's hospitality, there's some home services, personal services. They kind of grouped it into categories, and I forget the number, like 68, if I recall, something around that amount of listed preliminary industries that meet the definition of an occupation that customarily and regularly receives tips. And so, as you said, it is part of OBBBA. And so we've got, some common ones and then maybe not so common ones.
yeah, and the food and beverage is where we're really waiting for a lot more of guidance because of the ways restaurant and food and beverage establishments can work with, tip sharing and the whole issue of service
Tip
charges,
pooling,
tip pooling, all that. So,
right?
again, this is the start. This is the easy stuff.
Right. Yeah.
And each of these eventually, and we'll talk more about this when we get to the draft of the W-2 for next year, each of these things will be assigned a number that you will have to put on the W-2 to indicate what kind of business these tax-free tips came from. And yeah, there was a lot of things that kind of jumped out at me that really either I'm a bad human being and didn't realize I was supposed to be tipping these people, or they have a really good lobbyist to get on the
Yeah.
list. But you mentioned in broad categories like home services, like plumbers.
I've
Um,
never tipped my plumber, I got to
I
tell
had
you.
never even thought about tipping my plumber. I was just glad he showed up or she showed up and fixed whatever the problem was. But all of those kinds of plumbers, air conditioner repair people, I did hear, I have asked people about this, lawn maintenance. A lot of people do tip their people who cut their grass. I mean, and this I'm assuming is regularly, as opposed, like I think a lot of us do things at holidays and give them money, end of the year or something like that. But uh,
Little Christmas
I
gift.
don't
I do
even.
that with my
Yeah.
the mailman or something like that, but that's
Who
not
didn't make the
regular.
list, by the way? The mailman did not make the list.
He did not make the list, actually, or true,
Yeah,
that's true.
yeah.
Um,
So, but I don't. I mean, maybe I should, but I mean, I don't tip the guy who cuts my grass unless I ask him to do something extra or something
special,
like
right.
that. Yeah. What I find really interesting, and one that kind of near and dear to our heart, Annie, I think we saw that digital creators, podcast hosts. So,
Yeah, so
y-
social media creators, digital content creators is another term for that, podcaster. So apparently we're supposed to be getting tips, Roger. So
right, we make the list. That's
anybody
right.
out there want to send me a few bucks, I'll take it and report it as no tax on tips on my tax return. But yeah, there were a few, you know, one-offs that I was kind of like, oh, really? I thought dancers was kind of funny. It didn't necessarily describe the definition of what a dancer is. I mean, I guess, if I did a little dance after someone gave me something, I guess I could reduce my
Yeah, that's
fees
right.
and whatnot. It fell right after the gambling section, so I'm not sure
Yeah.
if it's part of like the casino entertaining type dancers, but musicians and singers and the disc jockeys and performers, those kind of people did qualify as well.
So we all need to learn how to sing or dance so whatever else we do, we can get tipped for our singing and dancing skills. What's really interesting in some of these, like going back to the plumbers again, I've seen a lot of W-2s for plumbers. Never seen tips on it on any plumber's W-2s. So
Yeah.
I got a feeling if they were getting tipped before, they've been tax free in one way or the
Yeah,
other
one way or the other, right.
before now. So now all of a sudden, are you going to report it and put it on a W-2 just to take it off when you file your tax return, assuming you don't, exceed some income limit or something like
Yeah,
that.
there's some thresholds.
So it's interesting to look at this list from, first of all, just a standpoint of, all right, who qualifies, but also look at it and go, I've never seen tips reported by these people before. So
Are you
maybe there's
suggesting,
a,
that people are gonna try to fit into one of these categories by tweaking their job description or something like that?
maybe we're
And
trying to smoke out something here because remember,
yeah,
this goes away. This is not a permanent part of the
correct.
legislation. This is a temporary part. And so, what if you see a plumber reporting tips for the next 3 years? And then when this goes away, they don't report tips anymore. Is that going
Yeah,
to be?
definitely could be some kind of strategy for, like you said, smoking out certain people. I mean, they had like a whole section on, like wedding photography, event planning. So like you have, some of these kind of industries that maybe are not so makes sense, but maybe it's just not ones that you would have come to. There's like a section about the people who put out your chairs at the beach, or little things like that. Obviously, the Uber drivers and the taxi drivers, and babysitters, your house cleaners, those kinds of things. But some of that stuff, I don't. And I personally, I don't tip on a regular basis, more of like you said, asking somebody to do something in addition to, or maybe like a holiday or something like that. So I think you're going to have to, can see how, let's say, your housekeeping or your maid service would make the list, but do you maybe I should be, I don't know, do you customarily and regularly tip those workers?
Yeah, and and maybe I mean, look at some of these, and there's some broad. Again, the IRS has got to dig in and give us some additional guidance here, but there's a broad category of personal care services, which
Mhm.
I mean, you could do that broadly. But what I might find interesting is you mentioned this occasional, let's say a business has a janitor and comes in and cleans, and you go to him and say, "Hey, I need you to go do the windows." And before I would say, I owe you $50. Now I might say, I'll tip you $50 if you clean the windows. Uh,
Mm-hmm. Right.
um, Or does the guy say, "Well, I'll clean the windows if you tip me 50, but I won't clean the windows if you pay me 50?"
Right, of course.
And how does the IRS, in their guidance, they've gotta think through now every little scenario, some of which we're just trying to be humorous about,
Yeah.
and talk about. But the reality is some of these things are gonna create that sort of incentive, disincentive, whatever the case may be, in these industries now that what I used to charge extra for,
Mhm.
now and then you've got the conflict from the guy who owns the plumbing company is out doing the work. They might be willing to discount the bill in exchange for a tip, but they won't
Right.
want their employees out there doing that because the employee keeps the tip and the business gets the bill. So
Yeah.
you're gonna have don't ever send an employee out, send the owner out so I can negotiate.
Well, yeah.
I mean, there's just gonna be all kinds of unintended consequences of something like this that, you know, we'll never think of all of it, and yet the IRS is supposed to,
And remember, this is only at the federal level. States,
right?
have the opportunity to jump on the bandwagon, or have a different version of this, or deny it altogether. So we're still. I haven't seen too many articles where a state has come out and said this is what we're doing. And like you said earlier, this doesn't go on forever. It is retroactive, which makes it a little bit more complicated, but it is set to expire. It only goes through 2028. Of course, Congress could act and extend it. It could make it permanent. I mean, we never know
Right.
what could happen, but there's definitely some. I don't want to say, let's say, consideration, some things to keep in mind, as sort of we're waiting additional guidance. I don't even know if we've received, I haven't seen at least that we've received exactly what the employee and the employer have to have for documentation of proof of tips. Um,
No, I mean, they keep
so
referring to IRS approved, there are some
exactly.
there's forms that I know probably in restaurants are common,
Comment. Yeah.
but again, if plumbers have been historically getting tips, I doubt that they have gone out and got whatever that form number is that
Yeah.
they ask their employees to report the tips to them, on a
Yeah.
pay period basis so they can include them in their wages. Because if they include them in their wages, they surely didn't include them in their W-2s, at least the ones that I have seen. And the state issue you mentioned, I haven't seen a state make a definitive ruling yet. Now, each state's different. Some states, I think their constitution says we adopt the federal law effective as of a certain date, which would mean everything applies. And others have to vote to accept it.
And it's
Some,
not
not
all on
others.
an annual basis. Like, I feel like some vote, to make it retro or forward, or I don't know. I've seen a little bit of talk among what states generally just go with it, like accept it, and which ones kind of have their own voting method.
Right.
But I haven't seen any state, come out and say this is now what's going to be applicable for 2025 and going forward. Um,
And
so
we'll talk a little bit about the challenges the IRS is facing. Some may be waiting to see what the IRS comes out with more than this
sure.
to see, is this something that makes sense? I mean, how are we going to put a dollar amount to it? How could we audit it or whatever? Because we don't.
Who's going to
They're
get
relying.
audited? I'm kidding.
Yeah,
Kidding.
they're
I'm
rel-
kidding. I'm kidding.
well. That's maybe not so kidding, but so the states may be sitting back for a little while trying to get a better sense of what this is going to finally look like, even though it's retroactive till January. A couple other points on tips. We've covered this before,
Mhm.
that you need to make sure. We touched about the fact that it's just right now, at least we have the information on the federal. We don't know what the states are going to
States,
be.
right?
There is income phase outs, so that
Correct.
it's not going to apply to everybody. So I guess if you work at a New York steakhouse, this might not be quite as advantageous as
Yeah.
if you work at a.
Yeah, that threshold is 150 for single, and then 300,000 for joint. So I guess you're right. If you live in a city with really high-end restaurants, that's something to consider.
Yeah, I think if you work at the corner cafe in Ludowici, Georgia, you're probably okay.
Yeah,
But
I think
if
you're
you
good.
if you if
Yeah.
you work at a big steakhouse in New York, you're not. And a couple of things. Remember, there's also a cap. It's 25,000 for married, 12.5 for single,
Single.
and remind people how those are applied, because
Yeah, so this
that's
is
something that's
kind of
important.
yeah, it's kind of unusual. We usually don't see, like, caps, um, based on households versus, like, the individual. So, what it's 25 so whether you if you are single, then it's 12.5. If you are married and one spouse has tips, those tips can be claimed all the way up to 25,000, assuming the other spouse is not claiming tips. So it doesn't
Right.
have to just be 12.5 each. It
Each
can
person.
be a combination or one person. So that's something also to keep in mind. In fact, I think I went through this on my first go of kind of researching, and I didn't catch it. And then I was like, I listened to a podcast, and I was like, yes, that is actually how it's read.
Right.
That's just a nuance of the language that, you might have just breezed past. But yeah.
So remember that. Now, and we're gonna kind of pivot from tips into how the compliance part works, because remember, this is retroactive till January 1st of 2025.
And I will
But
mention the no tax on overtime, which we're not gonna cover in, today, but that is also retroactive to January 1 of 25. So just a reminder there.
all of that's for 25,
Right.
and yet none of the forms, the W-2s, the W-4s, the things that would normally be impacted by something like this are being changed for 2025.
No,
So
they're not. They came out a couple of the Treasury came out not too long ago and was like, "We're not going to change the withholding tables. We're not going to issue updated W-2s or W-4 for 2025." And what that actually has resulted in is your paycheck's not going to change for 2025
right, right,
automatically. I mean, I guess you could go make adjustments and send in a revised W-4, but all of these qualifying industries are going to have to wait until they file their tax return in for their 2025 tax return to see the benefits of no tax on
right,
tips. So
right.
there's a
So
waiting kind of.
yeah, and I think that's another kind of like the 25,000,
Mhm.
12.5. That's something that I think a lot of tipped workers probably didn't anticipate, that they assumed as soon as this became law, they would immediately start seeing the benefits of it. They're not.
Yeah,
You mentioned they can try
fortunately.
to figure out how to change their withholding. The systems just aren't set up yet, though we'll talk about it in a minute. I'm not sure the systems, when they are set up, will be that much better. But anyhow, make sure that all your clients who have people in these categories know that they'll see the benefit when they file their tax return. And this is kind of a move into the next topic. When we get to 2026,
Right.
we have seen draft forms of both the W-2 and the W-4, which would, in theory, if anybody could understand it, allow you to benefit on a paycheck by paycheck basis for things like no tax on tips and overtime and even car interest and the
Right,
other things.
there's several provisions that are new. Yeah, it's really unfortunate. So pre-Tax Cuts and Jobs Act, the W-4 was like 5 or 6 lines, and what you put your exemptions, and if you wanted to change your withholdings, and then you got to, like, this number, and it was like a 1 or a 2, and then based on that, you could sort of determine, what your withholding status was. It wasn't super complicated. I don't even remember it being multiple pages. I mean, maybe like 2 or 3 pages. It's this concept of, like, withholding allowances. How many kids do you have kind of thing,
Yeah,
based
yeah, we
on
counted
personal and
heads. Yeah, we
counted heads.
started.
Yes,
Yeah,
exactly, counted heads. And then in 2018, remember the personal exemption was pulled out. And so now we have this concept of like withholding allowances, but not with personal exemptions because they became obsolete. And then they decided that they people. I get the goal. The IRS was trying to make it easier for taxpayers to either not over withheld or under withheld to make it a little bit closer to what it was going to actually be when you filed your tax return.
right,
Remember, there are a lot of people who anticipate big refunds. There are a lot of people who are like, I always owe. And so they were trying to make the revised W-4, which starting in 2020 would eliminate sort of these allowances and do more. If you think about how a tax return goes, your filing status and your dependents, and then here's your income, and do you have deductions, and what other things that could affect my situation? Trying to get that amount that you're withholding as close as possible to what your tax liability would be.
Yeah, and it wasn't perfect, but
No.
we all understood it, and we
Yeah.
all knew that if I was married with 4 and I owed money, I could fix it by going married with 2 or married with 1.
Right.
And we knew if I was getting, single, I could even claim single if I needed to, just to have more. We knew how the system worked. We could
Right.
raise these allowances, reduce those allowances, which would cause our income
Withholding.
tax withholdings to go up or down or whatever the
Mhm.
case may
Mhm.
be. And while it wasn't perfect, it was understood and we knew how the system worked. And my experiences told me, that since the new W-4 came out, we haven't broken that mentality yet. That most people, I mean, I can't tell you how many calls I get saying, "I got a W-4. How do I put single with 2 on here?"
Yeah, yeah.
Well, well, you can't, you know, but, so an attempt to give people the ability to break even, I guess, is maybe if that's what your goal is so when you file your tax return at the end of the year, you're square. We haven't kept your money when you were entitled to it, and yet you're not gonna owe us a big chunk of money. Noble goal, but
Right. Oh, absolutely.
I don't know how many years we had been under the other system. And you can change a form, but you can't change how people think and their habits just by changing a form. And I'm not sure we're in better shape. So, uh,
No, I don't. It is difficult, and there's not like a way to say, okay, here's all my answers. Like this is what I'm estimating, but like, okay, can you just like I want to add a little bit or take a little bit back or make a small adjustment. And the tables are hard to follow.
right,
I found the tables hard to follow. So I feel like it was sort of like that first year of the W-4, people just kind of guessed. And then based on, the outcome in that first year, they kind of tweaked their kind of how they completed the form or they updated a form to tweak it for however whatever which way. But I really wish when OB3 came out that we would have maybe reverted back to the old version because now we're just adding more
right. Now we got
exemptions and more
more lines.
lines and
Yeah.
whatnot. I was a little disappointed that instead of going forward starting in 2026, instead of making it more simple, I think we just made it even more confusing and that much harder
Well,
to
now we got,
complete. But
I don't know how many worksheets we got and
oh,
tables
it's
and
like
things like that. And
yeah,
again, again, I'm just what people have told me. If I could do this, I could do my own tax return. Because in essence, that's what you're doing.
that's what you're doing. You're
I mean, you're
estimating
kind of doing your
income
tax return.
deductions, da, 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 da.
Now, and Annie touched on this, and this is something that one of the things that may have saved us, through the old of the current W-4, not the old W-4, is if you owed money, there was an easy way to fix it on the old
Mhm.
W-4. Like if you owed $2,400 and you didn't want to owe $2,400 next year, and you were going to make the same amount of money, you could say, well, how many times do you get paid? Well, I get paid once a month. Okay, we're going to divide 12 into 2,400. You're going to go with the W-4 and just fill out the line that says extra withholding and put $200 on it. And so they would withhold 200 extra dollars. And in theory,
You
everything being the
right.
same, you'd break even. So it worked well when we were short of withholdings and needed to add more. I know what we're gonna do here at Paget. By the way, any of you can do this. The W-4 and the W-2 we're gonna talk about are both in a comment period. So
Yes,
you can go to the website, you can pull the forms up, you can see what they look like, and if you have an idea on how to simplify the process or simplify the form, whatever, uh, the instructions are there, and you can actually send in comments. So these aren't final forms yet. These are proposed. And one of the things that we're gonna propose is we know how to make it work if you owe money. These new things might reverse the problem, and
right.
now I'm getting a $2,400 refund, and I don't wanna wait till the end of the year. So why can't we say, reduce my withholding by $200? And I know they're gonna push back and say, "Well, what if they owe and penalties?" And just put all the disclaimers and warnings and everything you need to, but give us a simple way to fix the withholding when it needs to come down, not just when it needs to go up.
Right. And I mean, we're talking about tips and we've mentioned overtime, but you're right. There's the senior deduction, there's the car loan interest that's, that you can deduct. So, I mean, there's a number of things to consider. In fact, looking at the draft of the W-4, they've got, it's multiple additional pages now,
Right.
but you've got a spot on there, in step 3 or whatever step it is, line A, B or C, like you put all these different numbers on there, whether you're qualifying children, because that's changed, whether you have o- overtime, tips, loan interest, senior deduction. There's a lot of additional worksheets that go just to get to the number that you put on the form. So I think it's 9 pages now. I'm not, I really do. I think the instructions are 9 pages. And so it becomes, and then, oh, well, you can just write exempt, or do you put a zero here, or do you just put a line through it, or do you, like, how do you actually complete all of this to get to the result that you want?
And big companies with HR departments will figure this out, but, it's that same small plumber with 2 or 3 employees that, now evidently is getting tipped, or, the small restaurant with 2 or 3 employees where they're doing the payroll internally. They don't have payroll companies or HR department. All these sorts of things add complexity to what appears to be a very simple part of tax law. And um, so I encourage all of you. I know you're busy trying to get through the next couple of deadlines, but go look at the W-4. Take advantage of the comment period. I mean,
Yeah.
again, we're going to talk a little bit about the IRS later, but historically they pay attention to those comments. And I don't know if they'll hold a formal. They usually take written comments for some period of time, then they hold an actual live hearing. That if you want to spend your own money and fly to Washington and get on the witness list, you can stand up in front of people and say, Here's my idea, and here's why I think whatever you're doing is right or wrong or whatever." They they do try to listen to things. Sometimes I think the lawyers get in the way of common
Mm,
sense ideas. I'm sure there's going to be a lot of pushback to the ability to reduce the withholding because, well, look, it's going to create people who owe that can't
right,
pay it, and
right.
then we're going to have collection problems. They're going to build this case that it's this huge problem. But if our goal is to have an accurate tax return that's at break even, sometimes we gotta take less out, not more, and
Yeah,
your form currently doesn't make it easy for people to achieve that, so we'll see, but if you've got some time and wanna look at it, it's a good time to kinda get out your frustrations, because I think most of the time, when this change came years ago, most of the people in our community were telling the IRS, "This isn't gonna work." I
yeah,
mean, this is you're making something. I understand the goal, and it's a noble goal, but the average worker is not gonna do or be able to do what
to
you're
do
asking
this.
them to do.
Mhm.
So
Yeah,
but some of you are probably making money by offering a service as "Bring me your W-4 and I'll
and I'll
fill
help
it
you
out."
fill it out. Yeah,
And I
that's
know some
true.
tax softwares will even generate a W-4.
Mhm.
So, you know,
Well, with the W-4 comes the changes in the W-2.
the
So
W-2.
we've got the W-2 draft for 2026 along with the instructions, and so now you've got some new codes. Box 14A and 14B have always been there, but now you've got some new codes to reflect the tax law changes. So the W-2s are going to look a little bit different starting in 2026. So we'll have that kind of change too if you're on the payroll side preparing these forms.
Yeah. And again, the form it's I mean, the stuff that we've gotten so far in all honesty is the easy stuff,
Hmm.
We
Hmm.
got a list of businesses, most of them are obvious, all right, look, we can debate some of them. The W-2, really, if you just took a quick glance at it, you wouldn't
Doesn't
notice.
look super.
Yeah.
Yeah.
But we've got new codes for allowable tips. Tips have always been on W-2s, as I'm sure
Right.
everybody knows. Now we're gonna put in a box the allowable tips if you have something, and we don't know what the difference is yet, so we gotta wait for that. We got the code, we just don't know how to calculate it yet. But and overtime is gonna have a place on the
Certain code.
W-2 now code as well. Again, we've gotta get some guidance on, the deductible overtime is based on the Fair Labor Standards Act, and certain businesses and industries, um,
Have
pay
special rules. They
different overtime calculations different ways. How's that gonna be settled? And again, All of this is retroactive till January 1st of 2025,
And
and yet
it's September.
yeah,
Right.
the forms aren't changing, so I'm guessing we'll still have a code or they'll tell us they'll take our best good faith estimate
I like
without
that. That just kind of opens the window for whatever you feel like is
I don't
accurate.
can we do that for everything?
Yeah, right.
I mean, why does it just work for tips and overtime? I think we should be able to well, I don't wanna say this, but some people do that anyhow, but I mean, it's
Yeah.
you know, we're gonna be putting numbers out on forms and claiming deductions with it was impossible to keep the records because we didn't know we had to
Know
keep
about
them.
it.
Right.
Right. Right.
So, how in the world do you ever audit that, or how do you determine whether that was a good faith estimate, an overly aggressive, a stupid estimate, just flat out cheating and lying and all that? I
Mm.
mean, who knows? So,
Right, right, right.
uh, we're in for some interesting times, to say the least. And but the W-2s, they're also out for comment. The W-2 and the W-4 are also out for comment. The W-2, I mean, I kind of was expecting exactly what we got, so I don't know that there's really much to comment on that. But we don't have the codes yet. We have the list of the businesses.
Mhm.
Uh, we have the code, but there's also a place on the W-2 to put the code of the qualifying business. So we don't have those yet. All right. There's something going on currently, and it's going to probably be more important in the long run than a lot of the stuff we've talked about. Uh, and that's the discussion of the IRS budget. And
Popular discussion this year.
yes, and a very meaningful discussion given everything that's already happened. So let's
Mhm.
remember that the IRS is down about 25% of their workforce through either firings, for a better word,
Layoffs or people taking the
layoffs,
deal or
taking the deal to go out. There's some court cases about whether some of those firings. Read an article today that TIGDA, who was kind of the auditor, came in and looked at the probationary employees that were filed. And this is kind of think about yourself as a worker at the IRS. When I tell this story, those probationary employees were all let go and got a notice that their work was unsatisfactory. Well, what TIGDA came out and said today was most of those people had never been reviewed. So they had no status as being satisfactory or unsatisfactory. And of those that had, I'm making this percentage up, but it's close, 95% were given satisfactory grades. And yet they were all terminated based on unsatisfactory performance. And somebody at the IRS agreed with that.
Mhm.
So now we have a court case where uh, the whole premise of them being let go is up in court. Some rulings, and we got so many judges that you can get one ruling one day and another ruling the next day that's the exact opposite. But I had one IRS person mention to me at some meeting I was at, that whoever had to authenticate that or assign it or however it works, I don't know the
Approve
process,
it or however yeah.
whatever the process is, say, the president has immunity. I don't. And, so there's some concern in the workforce that, some of these, I'll call them quick, rash, hurried actions,
Mhm.
if they cross the line, are they now subject for personal liability for some of these things
Yeah.
because they did it? And as we all know, some people who didn't want to do certain things got sent
Got
to the
fired.
front door. So,
Well, and then they fired some and brought back some of those people that they had previously fired, and so it's like, you don't know who's coming, who's going, you know? Are
yeah.
you next on the chopping block or, you go to work and half your coworkers are not there? I can't even imagine, not just the stress, but the tension and yeah, the work
Well, and
environment.
you can see it and feel it when you go to these forums, and as I'm sure you saw in New Orleans, and I've seen now in 4 of these, is as you talk to people, you can tell. I mean, they literally don't know from day to day, A, do they have a job? B, what is their job?
Yep,
And in some instances, and that's kind of where we started, and we'll come back to the budget, uh, they've got a lot of work ahead of them. This whole, bill that was passed and filing season that is quickly approaching
with fewer resources
with fewer
and
resources
people and money and
and yet, and again, the budget's not final and it starts in the House. So we're talking really about what we are seeing from the House. But they're proposing a big cut to, I heard this weekend, back to like 2011 levels.
Mm,
And I mean, I'm sure we can all do better with less. So I'm not,
sure.
I don't know what the right number is. I don't know how many people the IRS needs. I do know what they need to do. And I think we'll all recognize if they're not doing it, then the question is, are they not doing
Right.
it because we have incompetent people or they don't have the
Yeah.
resources or
What's
is
the
it a
cause?
combination? What is it? But I'm afraid that a lot of this is not being thought through. It's just being done because how do you and the majority of the cuts, not a big surprise, is coming in the enforcement part of the IRS. So they're basically giving services some money, to keep going, technology some
Yeah.
money to keep going, but we're going to cut back on enforcement to make these dramatic cuts. And I get that if I'm a congressman or a senator. I mean, nobody's going to vote for me if I go around saying I want the IRS to audit more people,
Right.
and
Uh,
so but
that's true.
but these are the people who collect the money for the government.
Right.
And
Without it, the government would not be able to run,
right. Now, in theory, and then we'll get into some details. So in theory, they're supposed to have all this done by September 30th.
or
But
there'll
as
be a government shutdown.
oh, there'll be a government shutdown. And
Right.
normally what happens is they get to the 29th and either do something or extend the deadline. I saw an article today. The Republicans are thinking about funding the government through January 31st and kicking it down the road. So there's
Kicking
some
it down.
tough
Yeah.
choices to be made. But so the first volley, if you will, came from the House. It's about a 25% cut to the IRS budget. And again, I don't know if I can get the numbers right, but the vast majority of that is coming from enforcement.
Yeah.
And again, I get it politically. I get it. If you ask the average taxpayer, where would they want the IRS to do less? They would say enforcement.
Yeah.
But
I don't think anybody is raising their hand for audit or send me some notices or come knock on
yeah,
my door kind of thing.
but I think we all need to recognize that we have a voluntary tax system.
Hmm.
And again, I can't talk dollars, I can't talk people, but we need to understand that for this tax system to work, we need the right amount of enforcement. And I think sometimes we need to point out how it could impact us. It could
Yeah.
impact our clients. Obviously, it's going to impact the IRS. But we need to find. To me, the way I describe efficient enforcement, and this is easy to do in an analogy. I don't know how to apply it to the IRS. Is you know how fast would we all drive on our highways if there were no state patrol looking for speeders? That doesn't mean they pull every car over. They pull enough over to slow the rest of us down.
Yep.
And they don't always just pull over the red cars or the blue cars or the cars driven by men or women. It's just based on how fast are you driving. And number one, I want to get you off the streets before you kill somebody, but I also want to slow down the rest of the people because they know I might be out here. So I think we need to judge enforcement not just on the direct interaction they have with a taxpayer, but do we have enough to make people think that doing things the right way still matters?
Well, I was thinking about this the other day. They raised all the 1099 miscellaneous and NEC reporting this coming year. And so now the threshold for you issuing a 1099 to a worker is much higher. So I'm
Right,
thinking to myself, like, the didn't change the fact that the income is taxable. It's always been taxable,
right.
but the mindset is, well, if I didn't get a form from this, person that I worked for, I don't have to report it. So you've got this, there's less workers at the IRS, there's less money for compliance. You're going to see less 1099. So do I want to be the person who, like, if my neighbor's not doing it or my friend's not doing it, like, there's like this incentive, like, well, nobody else is claiming this as income. Why do I need to claim this as income? Or they should be and they're not. And it makes me angry because I'm doing the right thing and others are not. And so you've got this sort of, conundrum, I guess,
Yeah.
of what the expectations are going to be of taxpayers. So, I mean, if nobody got audited, I'm sure people would be a little more lenient with their choices on their tax
Yeah.
return.
Well, think about it in the small business community because what we're gonna have is the average person who works a job, maybe their spouse works at a job, they have a mortgage, they have mortgage
Hmm.
interest, whatever. The IRS can verify most of that tax return just based on the information that's in their system.
Correct.
But for small businesses, 1099s are gonna be less prevalent.
Right.
1099-Ks will probably still, for a business, still be out there, but you can have a competitive disadvantage by doing your tax obligations correctly if there's no enforcement. So I can be
Yeah.
in I keep coming back to the poor plumbers, but they're my example. So I can have plumber A who treats all their employees as employees, reports all their income, does all the right things, competing for a job against plumber B who decides, "You know what? The IRS doesn't have any way to do enforcement. All my people are gonna be contractors. Nobody's gonna be an employee. You know what? I'll skim a little bit of money off the top." So all of a sudden, if I'm in a competitive bid with that other plumber, they can underbid me
Yep.
and take work from me by not following the system and them not being worried about it. So if we don't have enough enforcement to level the playing field, what are our small businesses gonna be pressured
Yeah.
into doing?
Yeah.
And none of us benefit. And if they're pressured into doing that, think about the impact it has on us.
Right.
Because
True.
I think everyone who's listening to this podcast, everyone that attends a tax conference, your intention is to follow the rules and to keep your clients engaged in following the rules.
Hmm.
And I'm sure we've all heard this at some point in our career, and Annie, you can comment on and elaborate on it. But well, gosh, you know, I talked to Joe down the street who's does the same thing you do, and they tell me I don't have to do all that stuff. And if I go down there to Joe to get my taxes done, I'll owe $5,000 less than if you do it. Well, if there's no IRS enforcement, what clients are going to keep coming to you?
Right. Yeah.
And so I think we have to look at enforcement two ways. There is needed enforcement where I got to go audit you and do things like that, but there's a sense of fairness in a voluntary tax system that I just think has to be there for it to work. And this willy nilly cut it, punish it, make it all bad. Uh,
Yeah. There has to be a, and I don't know. You're right. I don't know the right dollars. I don't know the right number of workers, but there also has to be. I mean, by removing the funding and reducing the workforce, I mean like the IRS has made so much progress with their technology advancements and modernization. I felt like the last year, the phones got answered, some of the online portals were there, returns got processed on time. So if you start pulling all of that stuff away, then the taxpayers have a less wonderful experience working with the IRS, let's say. Now their refunds are late, or they can't find what this notice means, or they're mailing stuff and never hearing back, or they wait on hold for 2 hours and then they get disconnected. And, as the frustration grows, they're less likely to comply because they're feeling like, well, they don't care about me. Why should I care about them?
yeah.
And so you're going to see, expect there'll be less compliance or accurate compliance, just because of frustration like our promoters. We have promoters that would totally take advantage of taxpayers. We saw with
Oh gosh.
ERC, but there's other ones too. Like you see, I don't know, conservation easements. I know you were telling
Yeah.
me a story about Georgia, but like we had the tribal credits. And so if there's not authoritative guidance, then how would a taxpayer know if these things really exist, and what they mean and how you qualify and what to do with it, and the pros and cons of it. So I feel like it's like this snowballing effect of, you know, yes, you can be more efficient. Yes, you can probably do more with less. There are those arguments, and I agree with you that some of them are valid. I think there's probably a little fat everywhere,
Oh, yeah.
but it could start this massive snowballing effect that, in the end, is not beneficial for anyone.
Yeah, I had
So
someone who I trust at the IRS tell me when I was in Baltimore Monday and part of Tuesday. What is today? Wednesday? We just got
today's
back.
Wednesday,
Um, you know, they're concerned that for the first time in years that, the filing season may not go as smoothly as,
right?
despite what you hear, there is, there's a chance that this filing season could not go smoothly. And you want to get the taxpayers' attention, hold their refunds up.
Mhm.
That'll get their attention in a hurry.
Yep.
And and the other thing, and this is where we need smart people making smart decisions about budgeting, hiring,
Mhm.
firing, systems, all those sorts of things. Because again, I don't think if you don't understand the IRS well, you're going to make some bad decisions, and some that could impact our industry directly. And Annie, we've had people who have worked in the communications and liaison part of the
Oh,
IRS,
yeah.
and they're really smart people. And everybody says, "Well, what is IRS? I don't need a communications part. We should get rid of that." What are they? There's where we should cut. What they don't realize is that's the group that makes sure this guidance we're waiting on gets to us.
Yeah.
And they when we have an issue, they are the people communicating to us when something happens and what goes on. They're kind of our liaison, with the IRS. I think one thing that I would hope that the IRS will do when you have fewer resources, you have to look creatively, maybe is the best term, on ways to supplement that when you don't have any money.
Mhm.
And I think there is an opportunity if they will empower the people like communications and liaison and other departments in the IRS, stakeholder liaison that
Liaison.
we've met with, that the practitioner community has a lot of valuable information and ability to be a resource to help you do things, and you don't have to pay us. You just have to listen to
Listen
us
to us
and
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 take us
do
seriously
take
and
us seriously. Yeah, and make it work
communicate
better.
that back up. They're communicating from us to the people who are making the decisions, and we're the ones that are in it. We're the practitioners. We have to figure out, how to do this, how to talk to the clients, what this means, how to interpret it. And so if we're struggling in that area, those are the people that can help us.
Right.
And you're right, we're free. We're free. They'll we can complain for free all we want.
Yeah, and some of those complaints are valid, and some aren't,
Yeah.
and
Yeah.
things like these IRS forums that we've gone to, that's they're gonna probably get in front of, when they by the time they do 5 of them, 15 to 20,000 practitioners. What if, and again, these are departments of the IRS that we don't think about. They're not the auditors. They're not the people who answer the telephone. God knows we need people answering the
Right.
telephone that know what they're doing, and
They're
it doesn't
doing.
take an hour to get it answered, and all those sorts of things. And I just wanna see this done smartly and done the right way. And I want the IRS to be more willing to not always have to do things the way they always have done them before. They listen to practitioners a lot, but sometimes they don't always really listen, if you know what I mean.
Mhm.
And they're kind of playing lip service to us as opposed to really taking. I think I said this on Maggie Romanella, who was on one of our earlier podcasts at Stakeholder Liaison. She's our advocate, but sometimes we need her to be our miracle worker to go get people above her to actually listen to us. That's got to change.
Right.
That we know about, like the W-4, we were telling people years ago, this ain't going to work the way you think it's going to work. But nobody
Yeah.
listened to us. So
Maybe
the
we gotta scream
challenges.
louder. Maybe we have to well, like the things like the comment period, like, it is important for practitioners to comment.
Yeah,
Otherwise, the service just thinks everything's fine. Nobody's making comments. They must like it. They understand it. They don't have any concerns. So, we
and
probably
and
need to be
and
a little bit more
we need to
proactive too.
settle the workforce some because they're all afraid to say anything now. I mean, I heard a story of somebody spoke up in a meeting and was summarily walked out the front door and fired because what they said person run
I
the
know.
meeting didn't want to hear it. So, how do you ask someone to take it to the next level if that next level person doesn't want to hear it? So,
Mhm.
more than just firing people and cutting budgets, let's be creative. Let's recognize the role of the IRS. They do collect the money that the politicians want to spend, and they'll probably pay attention when they realize they don't have any more money to spend because they're not collecting it. But let's recognize that they have a role. We do need an enforcement arm. We do need a fair system. Let's empower practitioners and others from the outside who have good ideas, and let's listen to them. Let's hire the right people and fire the right people. Let's just don't
Mhm.
fire last in, first out. Quit trying to steal the depreciation method. Let's do some sort of,
Right.
uh, you know, uh, thoughtful way of spending our money and be open. I think there are a lot of good people at the IRS. Unfortunately, a lot of the good people said, "I'm not staying here anymore,"
Yeah,
and they're
that's
gone.
that's really
And there's
troublesome.
more. As I heard, a lot of those retirements don't really kick in till December, so we're going to see another wave going at the
Ugh.
end of the year. And we as an industry need a functioning IRS, maybe more than anybody, because we're the ones that have
Yeah.
to stay on the phone for 2 hours waiting for someone to answer, and we need a good answer. We need guidance on this bill. We need a regulation of preparers to make sure good preparers are in business and bad preparers aren't, not a system where a bad preparer has an advantage over a good preparer because they can advocate what people wanna hear, not what's right, and get away with it.
Mhm.
And, again, let's just do it smartly. Let's cut where cutting is needed. Let's improve where improvement's needed, and let's make the system better. I'm worried. I'm getting more worried the more I talk to people because I see that it's kind of like when you're flying on a plane. They say don't get nervous till the flight attendants get nervous, and I'm beginning to see that at some of the people at the IRS now. And they're not just nervous for their job. I knew they were all nervous for their job, but
Right.
I think now they're worried. Are we going to be able to pull this off if we don't get some stability and some direction and uh,
Yeah.
have some people who know how the game is played and how it needs to work. And as I challenged them back, I said, well, then bring the practitioner community in a serious and effective way. And make sure we're committed to doing the right things, not just trying to stroke our ego because, hey, I got to go talk to this person at the IRS. No,
Yeah.
come in if you've got a good idea and you're willing to help make it work, not just so you get your name in the tax media.
Right.
Uh, So we'll see. It's gonna be an interesting
It's gonna be
interesting.
interesting. I was about to say, let's see what we between now and the next 2 weeks when we do a podcast, we could have more information because 'cause we're getting, close to 1, the deadline, but 2, the September 30th deadline for, the government shutdown. So, might
Yeah,
have some new stuff to
and
bring
I
to
think
you
we said this on the
very
last
soon.
podcast. Yeah, I don't think we'll see a commissioner change. I think Bessett's probably
Right.
here for the remainder of this term, just because, first of all, there's not enough time left for anybody to wanna go through the hassle of, uh, getting nominated and going through all that. I did hear that I will not mention any names, that an ex-IRS commissioner is campaigning to be brought back.
Oh, wow. I did
Uh
not know that, but, okay.
I
Alright,
will
I like
not
it.
I will not disclose his name, but I think if you read the tax media, you won't be hard to figure out who it is.
Right,
When
right.
you raise your hand and say, "I'm available," then
Kinda means yeah,
I'm available.
interested, so,
So I don't know
okay.
what happened. I think the tax part, I mean, there's some talk in Congress about changing some more tax law, as they solve the spending bills. I don't know. I don't know if they can get that done.
Yeah,
Uh, right now, they just gotta fund the government, and anytime you throw up something new and a different change in tax law,
it's just
I
another
don't
thing.
know. Yeah, I mean, I've seen them don't tax Social Security at all, get rid
I
of the
saw that
senior
too the
thing.
other day that
Yeah,
that's coming back. Some things that didn't make it into OB3 are now,
yeah.
getting
I mean,
revisited. I don't know.
I don't know. I'm more of a belief that we're gonna try to get the government funded through the end of the year, uh, and then we'll see how it goes from there, and hopefully they'll just tell the IRS, "Go do your job. Here's some money. We're not gonna fire anybody else unless they just really do something bad, and we're gonna try to we gotta get through next tax season. This one's gonna end, and we gotta get ready for the next one."
I know it comes fast.
All right, Annie, take us home. That's all I got.
That's all I've got. Kind of was a depressing podcast today. I don't know. We didn't bring too many happy notes here, but I do appreciate all the listeners. Once again, Roger and I love doing this, and if you have ideas that you want to share or things that you'd like for us to cover, please send us your suggestions. And as always, we will be back in about 2 weeks or so with another podcast. And Roger, that's all I've got. So
All right,
you
and
want to
remember,
close
we can
it out?
now accept tips. So,
Oh yeah, that's right. That's right. Let me know if you need my address or my email or something. You can drop me a gift card.
yeah,
Yeah, we'll see.
send your suggestions for future podcasts with a $20 bill, and we'll consider it.
We'll take it. Yeah.
All
All
right.
right. Thank you so much, Roger. This was fantastic.
Thanks, Annie, as always. Thanks all for listening.